Good day, everyone. I am Miss Mbele for Office Administration, Personal Assistance, Level 4. We continue with our lessons. Our lesson today is Topic 2, Applying Basic Principles. Our textbook is still the same, Personal Assistance NQF Level 4, textbook TVET First by MacMillan. For this lesson, we are going to consider page 36 to page 38 of our textbook. Lesson 1, Part A. For this module, we are going to cover Module 4, Part A, Profit Motive, Accounting Terminology, Gross Profit and Net Profit, how to calculate gross profit and net profit. The profit motive. What is profit? It is the difference between what it costs to produce and sell a product or service and also the amount in which the product or service is sold for. Profit is the measure that is used to indicate the success of a business. For you as a business owner to see whether you are making a profit or not, you need to calculate the cost that you have, all the costs that you have put into the product in order to produce the product, and also the cost that you have put in order to sell the product. Then you will get the difference. That difference will be your profit. How to evaluate the performance of your business. It is very important as a business person to measure the profit of your business by drawing up an income statement or profit and loss statement. The income statement declares all the income and expenses acquired by the business over a period of time. And it is also known as profit and loss statement. It helps the business to make financial decisions and also to evaluate its performance by comparing the profitability of one year with another. So what you normally do when you evaluate the performance of your business, you measure what are your expenses, your income and your expenses. Then you see the difference that you have made, which is your profit over a certain period of time. That is your income and expenditure for the business. Basic accounting terminology. For this lesson, you will need to know basic accounting terminology. For those who has never done accounting previously, this is the basic information that you need. If you master this page, you will know everything about accounting as we will continue with our lesson. The first one is the assets. The assets are those is anything that the business owns that has cash value, such as your land, your building, and your equipment, as well as your vehicles. The fixed assets are the permanent equipment that is used in your business to produce, such as the buildings, machinery, vehicles. There is depreciation. The depreciation is the decrease in value of your assets. Things such as your vehicles, which is your cars, they depreciate in value, which means that they decrease in value. As you drive your car out of your organization to deliver the products, they depreciate, they lose value. The things that appreciate in value, that increase in value, are your assets such as your land and building property. They appreciate, which means that they increase in value. You also need to know things like dividends, raw material, direct labor, liable and liabilities. The most important one is the profit and loss. The profit is when income is greater than the expenses, and the loss is when the total expenses are greater than the income. Gross profit and net profit. What is gross profit and what is net profit? In the business environment, if the difference between the sales or income generated by the business and the cost of sales of producing a product, that is called gross profit. That the difference between the sales and the cost of sales of producing a product is called the gross profit. Then the net profit is the difference between sales and all expenses incurred by the business during a specific period of time. So which means that the sales and all expenses incurred at a certain period of time, they are called the net profit. For you to be able to calculate the gross profit and the net profit, you need to know the formula to calculate the profit margins and the gross margin. The formula to calculate the profit margin is the profit margin equal to net income divide by sales times by 100%, and you must use the percentage sign in your calculator. The formula to calculate the gross margin is gross margin equals to gross profit divided by sales times 100%, and you use the percentage in your calculator. These two formulas are very important. You need to learn and know them. Profit margin or gross margin can be used to know how successful the business is doing currently compared to the previous years. So whenever you want to know whether your business is doing well this year compared to the other years, you will do your calculation. You will calculate your profit margin and the gross margin. You will also compare profitability of the business current year to the profitability of the previous years. It's not only the success, but the profitability as well. There is a difference between the success of the business and also the profitability of the business. If the business is making profit, then you will know. And also, when you are calculating the profit margin and gross margin, you will also be able to compare profitability of the business with the industry's standard, which means that in whatever industry that you are doing or in whatever product that you are selling, you will be able to know whether your business is doing well and is getting profits as well in that particular product that you are selling by calculating the profit margin or gross margin of your organization. Gross profit and net profit. How to calculate the gross profit and net profit of an organization. You will need an income statement showing the income and expenditure of the business. Remember, the expenditure are all the expenses that you have used to produce your product and to sell the product as well. You will use the formula to calculate profit margins. The formula that we have spoken about in the previous slide, you will need to use in order to calculate the profit margins. Let us use the example in page 38 to show how to calculate the profit and gross margin. In the bank statement provided in page 38, the net sales of the organization is 240,000. The net income earnings after tax, which is earnings after tax, is equals to 6,300. The gross profit is equals to 70,000. So what you will need to do whenever you are calculating the net profit and the gross profit, you will go to the income statement, take out the net sales, the amount of the net sales. You take out the amount of the net income, which is the earnings after deduction after tax. You will also take out the gross profit from the income statement. Then you will use the formula that you have been given. If you are calculating the profit margin, you will say profit margin is equals to net income divided by sales times 100%. In this case of this example, 6,300 divided by 240,000 times 100%, and you use the percentage sign. For the gross margin is equals to gross profit divided by sales times 100%. Use the percentage, and then you will get the amount. In the case of this example, the amount of the gross profit is 70,000 divided by the sales, which is 240,000 times 100%, and you press the percentage sign and you'll get the total. Use your calculator to calculate the profit and gross margin above. I have already put the formula for you and also put the amounts for you so that you can be able to see. Use the percentage sign on your calculator for your calculations. For this example, you must read page 38 so that you can understand what the gross profit and the net profit are and how these two are calculated whenever you want to see the total amount of the profit margin and also of the gross margin. Thank you. We'll continue in our next lesson.